Hello, this is Mitch King with Trade Stocks America with the Daily Stock Report. Thursday evening, April 23rd, 2009. The market was up a little bit at the last hour, up 70 points on the Dow. We have some news after the market with Microsoft that might help pull up the market a little bit, just a little positive sentiment. The assumption I've been taking the last week or so is that the market is probably trying to peak here and head down a little bit. And this may take some time, a period of time, to make a shallow top. And let's take a look at that. So if this continues on something like this and drifts downward, that would be the most logical. We're getting a lot of indicators that we could be heading that way. I've been saying that for a few days now. If that's not the case, what you're going to see is you're going to see something real spiky. You know, if you see something that goes straight up, just a straight vertical line like that, and it step ladders up a little shallower, and then goes like that. This first bullish spike in a real big day, the market reacts with some sort of news, like it did like this day right here. See this right here? That's a very bullish sign. Not just because that day it went up a lot, because it tells you the market is got some buying. There's a lot of theories behind that, but my studies show that's definitely something to be paying attention toward if that occurs. So for now, we'll continue on that assumption, and let's take a look at some of our stocks we've got. And again, here's the NASDAQ, definitely stronger than the S&P and the Dow on the chart, but it's still likely if the other two indexes head down that the NASDAQ will follow. Here's Ciena, telecom sector, real steadily up, and it's in that channel that I've talked about it several times. So it's staying in that channel, and as long as this keeps doing that, you keep on holding, especially with that moving average, the short moving average moving up like that just looks excellent. Let's take a look at RADS, another real strong stock, one of the few stocks that we've got highlighted yellow as a long position. So let's draw that line again. That looks real good. Moving average line is moving up. Even though it's down 3% today, still looks good. Let's take a look at Amazon today. Up 2%, just keeps on moving up. Now Amazon tends to do these long runs. Here's Baidu. And let's take a look at Apple. All real healthy looking stocks to be long on. Now let's take a look at some of those shorts for you aggressive traders. Let's take a look at them. Oh, one more thing I want to cover is CMG. You guys have been seeing me talk about this, or at least seen the notes in the stock table. This thing's been hot. So today it opened at 92.39, and that's the first number right here. So it peaked right at the top. There it is. It opened there and pretty much went down from there. Now it's sort of a little bit of a baby bull short, a real small version of it, where it tail slides and heads down. Very possible to see this thing drop $4, $5, $6 the next couple days, and then probably try to move back upwards, but that's hard to tell. Let's take a look at the real-time chart on that. And this is where you're going to use the telechart the daily chart to give you a little bit of an idea that there's some selling could come into this. And that takes a lot of experience or a very clear understanding of kind of a bull short model. This is a miniature one. So it opened up here at $92, closed yesterday's close was around 86. So it opened up $6, and then it's breaking down. So it'll probably break down for a couple days. There's a move there for about $3.50 potential there, but that's about 4%. That's good money. I don't try to bottom fish too hard on those bull shorts. You really can get hurt. On this chart pattern where it's curving up like a banana, where you're curving up like that, real nice curve, and look at the volume. You're getting to see that curve and that volume in there, exponential increase in volume. And that's when you see these things tail slide. So I would guess that you can see $80 tomorrow, and if I were, I'd be looking for a short position on this as an intraday scalp tomorrow. So I think it'll just be open down, and attempt a little bit of rebound, and that's where you want to open your short position. And how you learn this is you do really small positions so it doesn't create a big emotional experience for you to do something new, and you feel like you're going blind and you don't know how to do it. Or at least do a paper trade and write down on a yellow pad what price you would have filled as you interpret those charts, both on the daily chart here and on this chart here. So tomorrow we're going to see a repeat. It'll probably open down, attempt a little bit of a rebound up, and then fall apart again. So that was CMG. I wanted to cover that. Let's take a look at a couple shorts I mentioned. It's going to be hard to see on the daily chart, but here's STP. That's down today a little bit, 1.2%. And these were swing trades I put down. Here's another solar-related stock, down 2.3%. Really hard to see. Okay, let's zoom in on for you. Sorry about that. And let's superconductor. Very speculative here. That doesn't look like much to drop 30 cents, but you just made 15% profit today in one day, so that's a lot. So if we see this thing going under $2, this very well could go right in here, $1.85 to $2, and that's really a big percentage profit. And I want to show you one more scalping little short tutorial, about 2.5 minutes here on DHI. Okay, we're looking at DHI, which is DR Horton. It's a housing stock. Here's a really interesting short right first 20 minutes after the first 20 minutes of the market. This is a 5-minute chart for the day. And you see here you've got the peak in the moving average, got the peak here in the MACD, and the peak in the stochastics pointing down. So you need all three of those, as we've talked about. What I was showing here was, let's look at this closer. Moving average kind of comes down here, it goes flat and slightly up, which is often a signal to buy, or at least to cover your short position. Well, what you do is you look at that MACD, and you see that's still pointing down, and let's open that up a little bit wider. See that's still pointing down? It's a little shallower here, but it's still pointing down, and it started from the top of the range and going down. So there really wasn't a reason to cover that, as long as this doesn't turn. That's why I like the MACD, because it's such a longer term, wide view perspective of the chart. Now the stochastics move around a lot, especially the yellow one, which is the %K, and that's the one I just look that moves around a lot, and I just look at it initially and see which direction it's heading, and I don't give it a lot of value except for your first glance as a confirmation between all your indicators. So here's a good short, and what's interesting here is you've got, well, let's take a look at the calculation here. You got $12.40 or $12.45 at the top. You got $11.25 at the bottom. So you take that $1.20 profit potential between the top and the bottom. So from this top all the way down to this bottom, you got $1.20 or $1.25. You divide that by what you pay for it, which would be $11.25 at the bottom. Now we know we're not going to get the bottom, but let's just get the potential profit in this.